Road to $1 million live on the show. I've just taken some huge steps to see my path to $1 million accelerated, speeded up. So in this video, I'm going to share with you what I've just done. I've just gone all in on margin. I've done my calculations. Today's show was half an hour later than advertised because I wanted to spend some time doing some serious calculations. I've done those calculations. I've made my judgments. I've made my moves. And I'm in. This is the road to $1 million. I started with $5,000 and I'm currently at $107,298. I've never shorted a stock and I've never done options, but I am all in with buying and owning and never selling great businesses. In this video, I'm making this live, doing a live stream. So this is how it comes out, unedited. This is it for you right now. I'm going to show you now how I'm going to get to $1 million. I've gone all in. I've looked at the businesses I want to own, never have to sell them. I've looked at the economy. I was right about virtually everything when it comes to rate cuts, when it comes to the businesses, AI, growth, all of it. So if you don't do the research, if you do the research and you study for 3 years, as I have done, 12 hours a day, 5 days a week, and you don't act on it, what the hell was the point? So I've made my moves. I've made my decisions. I know it's going to be a rocky path. There's going to be ups and downs and macro conditions and people declaring the end of the world. And Meet Kevin will tell us the world's coming to an end. Donald Trump will probably say that America's going to cease to exist in 48 hours. We've had that before. It doesn't matter. I'm going to go through all of that. And remember, the most difficult time is at the beginning. Every day, it just gets that little bit easier, because I'm already in. I bought the future now. So let me explain. Here we are. This is my position. As you can see here, we're at 81,159. That's my brokerage position. This is my Roth IRA position. This is my total position, 107,000. I am only in the S&P 500. So first of all, I need to explain why I'm only in the S&P, and then I'll go into detail with everything else. So I am in the S&P, all in on the S&P. Primarily, I did that originally because I wanted my show to be seen, to be the most honest channel on YouTube TV. I do not want to be part of the pump and dump brigade. I don't live on Reddit. I'm here full-time on TV, on YouTube TV. This whole setup was designed to be delivered as a TV show, not as a YouTube video to get subscribers or views. It's just to provide quality information, quality video, quality audio, true, real, and honest. All of the money I have in the world is here. I have no money in the bank. This is my bank on Robinhood, 100%. I'm waiting for my gold card to turn up, and then I will be using it to make all my purchases as well. I'm all in one place. So I bought the S&P, first of all, to be fully open and transparent so I can't be accused of pumping and dumping stocks. However, I also, after 3 years of study, believe it's the best asset to own. I bought it through VU, which is marginally slightly cheaper from a cost basis for an expense ratio than SPY, but it's virtually identical. Unless you're trading millions of times a day, it makes no difference. But VU is the preferred choice for retail investors. It's marginally cheaper. And if you're talking about the price of the stock, that's not what I mean. It's different because it had a different inception date. The growth is exactly the same. The positions were exactly the same. The allocations were exactly the same, but it's slightly cheaper. It's designed for retail investors who don't trade a million times a day. So that's why I'm in VU. Now, I'm also, and that's how I access the S&P. Now, I'm also extremely bullish, and I'm going to explain what I've done right now on VU. I believe it's the best asset to own, regardless of all the things I've just said, for these reasons. We now know interest rates are coming down. We now know that 100%. There's no doubt about it. It's happened twice in Canada. It's happened in India. It's happened in Europe. It's happened today in the Bank of England in the United Kingdom. The US are behind because they use lagging indicators. Remember, an investor wants to make moves before everybody else does. I'm not a lemming. I lead. I control my positions. I'm proactive, not reactive. I've already moved months and months ahead of everybody else. Everybody else is now catching up with me. That's what investors do. Traders, gamblers, they react. I don't do that. I'm in control. I'm the general. I'm the emperor of my universe, and that's why I've made my moves. The S&P, in my opinion, is the best asset to own because it has, first of all, history over time. If you're going to take huge risk, if you could call this a risk, I don't call it a risk at all. If you are going to take huge positions, huge risk on a stock, it has to have excellence of service, excellence of conviction and delivery. It has to have history. You have to know that it has outperformed perfectly, consistently over a long period of time. Otherwise, you're guessing and hoping. The S&P provides that. It is also tech heavy. It favors tech, the Mag 7. We used to call it FANGs. We now call it the MANGs because Meta, of course, used to be called Facebook. It favors that. Now, recently, because interest rates were guessed to be coming down, people moved out of the main market and they went into the small caps. They went into the Russell to buy the rubbish. That's a bad idea. However, it made some people some money quickly, and now they're chasing the stock back up again and paying more than they did in the first place. They've now paid 20% on their taxes. So overall, at the end of the day, when all was said and done, they haven't actually gained anything because they'll have to pay 20% on the tax, on the gains, unless they've done it through their IRAs. Don't chase the market, own the market, stay in the market, and let the businesses go to work. So that's why the market's trimmed off. Now, while all this was going on, I was buying more. I was already lowering my averages on the S&P. I was in margin and I was buying more of the S&P. But while this was going on, I was also studying all of the earnings. I was listening to Microsoft. I was listening to, we've got Apple, is it tomorrow? We got Apple tomorrow? No, we got Amazon tonight. We got Amazon tonight. We got NVIDIA coming up, and we had Meta yesterday. I've been covering all of these earnings, not to get great views on YouTube. They don't get many views. People don't want to sit through earnings. They find them boring. I find them fascinating, and I'm listening to the numbers. I listened to all of the numbers, and I realized that there's no bubble with AI. AI is the next industrial revolution, if you like, the AI revolution. And everybody sold off the top wrongly. They moved into the Russell to make a quick gain, but as I said before, overall, when all said and done, end of the year, when you pay your taxes and come back in, actually, you're no better off. You're now chasing the stock up. They're now buying back the Mag 7. The Mag 7 are going to lead the S&P and could make up as much as 30% of the gains over the next 12 months. I now see that the S&P can 3x by the end of the decade. Now, Tom Lee has talked about this, and a lot of people said that sounds pretty wild and extreme because normally the S&P doubles every 7 years. However, we've got a revolution right now, and we've got a huge growth with AI. AI yet hasn't performed yet. It hasn't delivered. It hasn't delivered for the investor, but it will. And we learned how and why and when last night with Meta, and we've learned with Google, and we learned with Microsoft, and tonight we'll learn the same story with Amazon. And then, of course, we'll all get the bonus with NVIDIA at the end of the month. I'm going to cover that earnings as well, and that's when everything will go sky high. We know that. We know that because we know that the companies are spending with NVIDIA. All of this hasn't happened yet, but it's going to happen. Calculations, numbers never lie. The stock prices are not the businesses. People have traded off, taken positions. People say, well, what if it goes down? People are selling, so they hope it goes down so they can buy it back up again. When stocks get trimmed off, it's not necessarily bullish. It's the market moving, dumping it so it can buy it back to make more money the second time. So you might say, okay, you like VU, you like where the S&P is going, you like where AI is going, but also because the economy is doing well and interest rates are coming down, the smaller caps, not the Russell mega small, but the mid-sized large caps that are in the S&P are all, they've all been growing okay, but they're all going to accelerate as well. So now you have an index, a balanced, stable index with everything about to take off. Okay, so it's the best place to be. A nice dividend, and off we go. Now then, some of you have said to me this morning, okay, so you've gone all in, show us what you've done. So I'm about to. And some of you have suggested, what if you believed all of this, why did you not buy last week? Last month, you could have bought it less. Someone said to me this morning, well, why did you buy it today? It's just gone up. Gamblers, traders are looking for the stock to go down. They're looking backwards. I, as an investor, am looking for the potential of the stock going forward. And I don't care if I'm paying more for a stock today than I could have done yesterday, if I've now got the information and the knowledge and the balance sheet and the earnings, which tells me where it's going in the future. I'm an investor going forward. I don't care about going backwards. That's the first thing. So I don't care the stock was down yesterday. I don't mind it going up. Going up is a good thing, not because the stock is going up, because the business is going up and people now are jumping on board. But that's not why I'm buying, because the stock's going up. I'm buying it because the business is going up. But remember, I've been buying the S&P in earnest since January. 8 months today, I've been buying the S&P. So even if I'm buying now at the top and it started to move, I've already got 80, 90% of my shares already in. That's the point of never selling, owning the businesses and not trading. I'm already in and I'm staying in. Nothing has changed. I've just increased my position. Now then, why have I gone in margin? Why would I just not earn money on YouTube every month, get paid on the 21st of the month, and just put money in over time? You know that my goal is to get to $1 million. Live on the show, here in front of you. That's my aim. That's my goal. That's going to happen. That's all I need to retire because I own my house. I have no loans. I have no debts. $1 million is more than I need to live in my little house in England. More than I need. And I don't even need to sell it. At that point, I can just live on the dividends, which will be substantial. I'll be making about 10% a year, 100 grand a year. That's more than I need. So my portfolio will surpass $1 million. So I've got several ways of achieving that. I've done my calculations and I've shown you the chart on the screen. If I put a couple of grand a month in and I continue to grow at the rate I'm growing and I never sell and I manually invest the dividends on the dips and the pullbacks in between, I will reach $1 million in 6 to 9 years. It's hard to be accurate. The calculation says 9, but my growth of my YouTube channel is not built into that. So 2 grand could become 3 grand and so on and so forth. So I am calculating at the growth that I'm on at the moment, it could actually be 6 years. So let's call it 6 years because I'm in charge of my own destiny and I'm building my own business and I know how to grow my business. So I'm saying 6 years. So just keep buying the S&P for the next 6 years. Every time I get paid, wait for the dips. I could do that. But if my calculations are right and I believe in what I'm saying and I do what I say and I say what I do, why would I not buy now? Now, of course, if I buy now, I can buy the future price for the next 6 years. No more, no less, because I just want to achieve $1 million. Don't want to achieve 2 million. Don't want to go crazy. $1 million is the goal. That's my objective. That's what I intend to achieve. Just like a runner, his intention is to win the gold and get the world record. That's it. No more. That's it. That's my target. So now I know what Amazon, Google, Microsoft, NVIDIA are doing. Now I know, after 3 years of research, where the interest rates are going, where the economy is going. Yes, there'll be ups and downs. There'll be scares. There'll be pullbacks. There'll be this. There'll be that, the other. Doesn't matter. We've lived through that hundreds of times with the S&P, but now we've got huge extra growth with what we have in the S&P through AI. And EVs and EV tolls and other things like that, space, SpaceX, all the rest of it. Because of that, I am extremely confident to buy today's prices for the next 6 years. So rather than wait every month to buy, and next month, buy again. Next month, buy again. Yes, there could be pullbacks. There could be ups and downs, and maybe I'll get a discount from today. But I know 100% months from now, maybe a month, maybe not even a month, by the time we get to NVIDIA earnings, a month, 6 months, 3 months, whatever, I will be dramatically up. Dramatically up. Because you've seen before, with where I was before with margin, I was beating the market by double. If the market was up 1%, I was up 2%. Now, I'm up 3%. Today, you won't see it because I've just bought. Until it resets tomorrow, it won't show much exaggeration. It won't do that. But it will it will tomorrow. And over the next couple of months, I will be up 3 times the market, 3x. The market, and I'll share with you live on the show every day. Now, yes, we'll get pullbacks. We will get pullbacks, and people will say, "Oh my God, what are you going to do now? What are you going to do now?" Absolutely nothing. There will be pullbacks. It doesn't matter. It will encourage fresh buying, but I won't be buying, and I won't be selling. I'm already in. I have bought now for the next 6 years. Done. So, between now and the $1 million, my job is just to earn money on YouTube, grow my business if I can, which I will, and I will pay down my margin month by month. Because of what I've done, I'm now in a lower band of margin as also I've got a discount because I've gone over thresholds. So my margin has already dropped. On top of that, we're going to get rate cuts, probably 3 this year. My margin will come down again. People at that point will be chasing the market, buying in, adding in, going in, more and more. I don't need to. It will be potentially maybe a little scary over the next month or 2 or 3, maybe. I don't think so, because my margin buffer is huge. Even though I've gone in at the top of the market, high prices, I was already in 80, 90%. So I've got many of my stocks, many of my S&P bought on VU at around about 420, about 30% up from where we are today. I've got an emergency exit. I've got a parachute to get out of the plane if it crashes, whatever. This is very well calculated. 3 years of planning, extra half an hour before the show today, going through all my positions. So I have not gone at someone suggesting in the chat here, 2x, 3x. No, I've not done that. I don't need to do that. That would be crazy. I'm going to share with you my position. What I've done now is simply enough to get me to $1 million in the period of time I've already allocated for myself, but in a different approach, which will now mean I have today's prices, not next year's prices, not the year after's prices, all the way to 6. Okay? Even though I've not had to spend as much long term because I've got today's prices, that growth rate is built in with only having to buy at today's prices. So I've actually spent less, if you like. So here's my position. There's my overall position, my Roth. There's my balance today. Now, of course, when it goes down, I'm going to go down 3 times as much. When it goes up, I'm going to go up 3 times as much. Okay, there we go. There on the screen, you can see there. There's my margin position. You can see on the screen. You can see exactly what I've done. I've got very, very low risk. Very low risk because I've been buying for the longest time, a $42,000 buffer. There is no way my portfolio is going to drop $42,000. There is no way. There is no way because the companies have reported, they've given me the numbers, I know what they're doing. There is no way. And remember, in 3 weeks from today, I start reducing. Boom, boom, boom. 2 grand, 2 grand, 2 grand. That 42 will become 44, but it'll exaggerate because when you pay off margin, it's actually more because the buffer goes up more incrementally. Okay, so I'm not concerned about that. You will see the rate that I'm paying. The rates, if we just show you this screen here, it's moved down from 6.75 to 6.55. Again, the amount I'm paying on margin is far less than what I'm going to make. That's why you do it. That's why businesses hold debt. They make more money on their cash than they do on their debt, what they would save on their debt. Now, as you can see, if I went a little bit more, I would be at 6.25. I'm not, as I don't need to. And the reason why I don't need to is I can achieve my goal with the amount of money I've already spent. I don't need to go any further. I don't need to push it 4 times. 3 times is enough. I'm not on about 3x. I'm on about 3x the market, not 3x margin. All right, so please understand me. So that's what I've done. I'm very confident. Some of you will say, oh, but why don't you wait till it goes down? I don't need to wait till it goes down. If you're waiting for it to go down, you are looking backward, you are a gambler, you are a trader, and you're looking backward. I am looking forward because I've read the balance sheets, studied the businesses, know my goal, $1 million. Now remember, just a few months from now, that's all it's going to take. I am going to be in 100% better position because 3 months from now, I wouldn't have bought anything, I wouldn't have sold anything, but I would have received next month over $212 now in dividends every month, which just about, not quite, just about covers my margin. So it's basically free and it's going to get better and it's going to get less. So my dividends is going to make me profit soon. At the moment, it's purely just covering the margin, which I call cost of business. That's the cost of buying the future now. There has to be a price for that. So there's my position. You're going to watch me go all the way to $1 million live on my show. I will not be scrambling around trying to find a dip or a bottom for the next 6 years. Now, of course, if my portfolio grows extremely well and my YouTube channel grows extremely well and I can pay off margin in 3 seconds, we can reevaluate and set a $10 million profit. But let's leave that one for another dream. Click above my head for all the links down below in the description. I'd like your thoughts and comments. Do you agree? This is not a strategy for everyone. It requires years of research, patience. It requires stability of mind. It also requires discipline, temperament. If you've got fear and stress and bills and debts and you don't know what your goals are and you're chasing the market, this is not for you. Please do not follow me. Please do not think this is the right thing to do. It's the right thing for me to achieve what I want to achieve. Over here, I'll put more videos that I'll think you'll find useful. Down here, I'll put some more content you'll find useful too. Leave me your thoughts below. I'd love your opinion and thoughts and comments. I will reply to every one of my members. Until next time, as always, join me on the road to $1 million.